All right. Happy Friday, everybody. Happy Friday to all you magnificent melon heads. It's my favorite time of the week, my Friday afternoon live stream. Last hour of trading, where I get to talk to all you wonderful folks about everything going on in the world of economics and finance. And the big story today, really around the whole world. I just came up with this. I love this. The freight depression. Remind me to get a copyright on that. I want a nickel every time somebody says it. The freight depression is upon us. Not the Great Depression, the freight depression. Because logistics managers, freight carriers, trucking companies are in the worst position in the world right now. They are under attack on all fronts, from all sides. They are surrounded. First, you've got the collapse in global trade. We got data on that today and this week. Right? We've got goods inflation is down virtually zero. Goods inflation, that is. Most of the inflation we're seeing right now is services inflation, not related to stuff. It's more services being performed by people. Things like transportation, things like healthcare, things like insurance, all going up. But stuff, not really getting so expensive. And stuff, the movement of stuff is collapsing. Exports in China down, 14% year over year? What happened to the China reopening? Remember that story? Up in smoke. Gone. We've got collapses in exports. U.S. exports are down. U.S. imports are down. China's exports are down. Exports across the globe are down, and freight rates are showing it. It's cheaper to move stuff across the pond, much cheaper than it was a year ago. Remember the bottlenecks at U.S. ports? Remember all the talk about the shortages of everything, how they were working overtime at the ports, and we just couldn't get any stuff moving? Well, that's over. Now there's nothing to move. The container ships are stacking up over in China, waiting to load. There's nothing to put on them because nobody's ordering anything. Trade is grinding to a halt around the world. And as that is happening, that's not the only thing attacking the freight companies and the shippers. You've also got major labor disputes that are going on around the world right now. And can you blame them? The cost of living went up, 25, 30% in 2 years? And I think that's probably putting it mildly. Of course people want to raise. They can't maintain the same lifestyle they used to have on the same pay. Everything got more expensive. And now the laborers are saying, I won't accept a decline in my standard of living while still delivering the same value to you. I want a share of that inflation. And so you've got these major labor disputes happening at UPS. FedEx is worried now. We got a story about FedEx and potential labor problems over there. The United Auto Workers Union wants 40% wage increases. Airline pilots getting massive wages. Labor disputes across the world. And, organized labor is just leading the charge. Let's be honest here. Everybody is going to want to raise because everybody felt the effects of inflation. And then the last adversary that is attacking the freight carrier is, of course, central banks. Because central banks just got to get in on the action, right? The Federal Reserve. Because you've got all these labor disputes, everybody wants a raise. The Fed is determined to make sure they don't get that raise. So you've got both sides are trying to hurt the employer. The union saying, we're going to go on strike, we're going to slow down work if you don't pay us. The Fed is saying, if you pay them, we're going to crank up your interest rates even higher, and you're going to end up laying them off because we'll put you out of business. And the guys in the middle just trying to make and move stuff are like, somebody, everybody, please shut up. Leave me alone. I just want to do business. And it all boils down to central banks and playing games and that cycle of inflation. I've talked about it this morning. I'll talk about it again. The cycle of inflation. Once you understand how inflation hits and the order in which it fits, this all makes sense. First, inflation hits asset prices, and the rich get richer. The people who own the stocks, the people who own the houses, they get wealthier first because those assets go up in prices. That was 2020 and 2021 when the stock market went straight up. Next comes the consumer price inflation. That was 2022. That was fun. Note sarcasm. When life got miserably more expensive for everybody, the price of everything went up way more than they were admitting. Gag me with their 8% inflation that they reported last year when the rent was 25, 30% higher in most countries or most cities around the country. That's the second order. Then it hits consumers. And of course, the last place inflation shows up finally is in your paycheck. After you get poorer, everybody starts demanding a raise. That's what's going on right now. Fed says, hold my beer. we are going to crash this economy before they can get those raises. And that's why I think right now the market is overestimating themselves. The market is underestimating the likelihood of another Fed rate hike. They're saying, no, the Fed is done. They're going to pivot. They're going to pause in September. I agree. They'll probably pause in September. But I think that November rate hike is happening. I think they're watching these labor disputes, these 40% raises that people are getting, and how once one gets the raise, now the next guy wants it, and the next guy and the next guy. We'll talk about that today and who those next guys are. The Fed is watching that. They're saying, oh, no, we got to stop that. We better raise those rates even more, put all those guys out of work, and then we don't have to worry about their wage spiral inflation. That Keynesian boogeyman that lurks under every bed and in every financial closet. It doesn't exist. The United States has never had wage spiral inflation, not ever in the history of this country, and yet the Fed fears it constantly. And that's why they're going to make us all poor to prevent wage spiral inflation that never happens. And if you're new, if you don't know what wage spiral inflation is the Keynesian belief that if people make more money, they will spend it. And that additional money chasing the same number of goods and services, well, that will cause the price of the goods and services to go even higher. The problem is it's not wage spiral inflation if you're just giving people raises to compensate for the inflation that has already happened. That's not wage spiral. That's, hey, let's let the poor people catch up to everybody else. They already got richer, they with a capital T. They got stupid rich in 2021. And then they laughed and they sold us, oh, we feel your pain. We're acutely aware of the harm being caused to you in 2022 when your life got harder and more expensive. And now in 2023, they're saying, we're just going to have to take away your job to make sure that inflation stops. And you're welcome. That's what's going on in central banks right now. And caught in the middle are the freight carriers. And Yellow was only the first. Yellow Trucking went out of business last week. They filed for bankruptcy. They're just the first, guys. They won't be the last. Freight carriers are in big trouble, and that's why I have come up with the freight recession. With that, we are going to shrink my big melon of a head. And before we shrink my big melon of a head, won't you please inflate that like button, everybody? It really helps me for the YouTube algorithm. And if you're new to the channel, won't you please stay a while? Hit that subscribe button. We do this every Friday. We also do our daily live streams in the morning. And let's say hello to the master of the Mystic Arts, my man, Mish the Mod. How we doing today, brother?
I'm doing good. You know who talks a lot about wage spiral inflation?
Who talks a lot about wage spiral inflation?
My boy Phillips.
Phillips. I knew we were going to get a Phillips curve reference today. The Phillips curve, that imaginary relationship between unemployment and inflation. You can't have high of one without low of the other. It works right up until it doesn't, and then we just shift the curve. Convenient. I got to get a curve shifter, so every time one of my predictions is wrong, I can just say, oh, just shift the curve, and I was right. I like it. That's what I got to do. Hey, before we go through the markets, I got a couple of guys here I got to say hello to already. What's going on? Mr. Edward Diaz, 1130. Thank you, Edward. I appreciate the super chat, sir. Support of the channel. He says, here's a bit more than a nickel. I appreciate that. A bit more than that nickel. Thank you very much, sir. Appreciate the support of the channel. And it's a bit more than a nickel. Every penny counts. Thank you very much, Edward. And thank you very much, Mr. Nashville Pasta Man is back in the house. $10 spot for Jack and Mish. 97 cents for the big guy. Come on, man. You got to throw in just 97 cents for the big guy. That's some big guy deflation going in there. I thought it was 10 for the big guy. I don't know. Maybe I'm reading my news wrong. Thank you very much, Pasta Man. I appreciate that. I appreciate the support of the channel and the laugh this morning. And with that, let's take a look at what's going on in the markets. We're going to refresh the CNN Fear Greed Index because it's been moving a little bit today. We are still at 66. Opened up at, well, we closed at, 69 yesterday, 67. Now we're at 66. A little bit more a little bit more fear in the markets than usual, but still, guys, well into greed territory. The market is still top heavy despite the declines recently. But looks like we're clawing back some of those declines. Look at the S&P, almost positive for the day. Are we going to close in the green? 44.68 on the S&P, down a paltry 0.1 points, or 0.00%. By the way, the S&P, check out the long-term chart of the S&P. This is going back until about February of this year. Let's zoom in a little bit closer here because, oh, look at that 50-day moving average acting as support today. We came down, didn't quite touch it. Caught a bounce. And by the way, the 50-day moving average does kind of coincide with these previous levels here. This was resistance. It came up. We failed it. Now we're going back up. Looks like that level's acting as support. That's right around 44.40. Keep an eye on that level. Keep an eye on that 50-day moving average. A break below that, not very good. The Dow is up 110 points. Good day for the Dow today. 0.31% higher, 35,286. What are we seeing? Are we seeing a secular rotation? Because the NASDAQ is still lower. 57 points lower, or 0.41%. Now, the NASDAQ at one point today was as low as, I think, 130 points in the red. So all things considered, not a bad day for the NASDAQ. We still got a half-hour trading left, so we'll see where that closes. 13,667 on the tech-heavy NASDAQ. And let's take a look at this chart here. Same chart going back to about February of this year, but a slightly different story. Check out the 50-day moving average on the NASDAQ. Goodbye. We missed it. We lost it. And we rose a little bit today. Nope, the wick of the candle. Looks like the 50-day moving average is now resistance for the NASDAQ in the upward direction. So NASDAQ's got some room to fall, folks. I mean, right now it's recovering some of the losses recently. But a close below the 50-day moving average, that would be the first close below the 50 since March, since the banking crisis in March. Yikes. Keep an eye on that one. Although, guys, the NASDAQ has just had a ripping year. I mean, year to date, what did we open we started the year at 10,300 roughly in the NASDAQ, now sitting at 13,600. So the NASDAQ could afford to shed a few, and I think would still be in pretty good position. Looking over at the DXY, it's just off the highs of the day right now. The Dixie's been moving higher, bouncing a little bit, but steadily higher all day long, making a series of higher lows as it bounces. 102.89 on the U.S. dollar right now. That's up 36 basis points, or 0.35% today. So dollar is moving up. That's not good for stocks. Looking over at commodities, we got December gold futures are down 375, trading at 1,945. That's down about 0.2%. We got September silver futures are down about a dime, or 0.48%, 22.72 on my favorite of the shiny. And September WTI, West Texas Intermediate crude oil at 83.22. That's up 40 cents. Or about 1% in the oil markets. Looking at the bond market today, yikes, guys. Yikes in the bond market. The U.S. 30-year up 7 basis points, or 4.30. That's up 1.6. But check out the 10-year up 9 basis points today. 4.17 on the 10, 2.22% higher. Guys, this is break something territory. This is Fed just broke something kind of numbers on the 10-year. We've only been up at this level for a couple of days, really, in the last year or so, and bad stuff has happened every time we've been up here. So it's going to be a big deal. Watch those yields next week. Watch those yields. Go ahead, Mish.
The only time we were up this high was in, we did peak up a couple weeks ago, but sustained long term, that was October of last year.
Let's zoom out. You're right. You are correct, sir. October of last year. Here we go on the long-term chart, going back to about May of last year. And we weren't really up here for that much. We spent about a week in late October up above this level, and then about another week in November above this level. And you may recall, let's see, October. What broke in October? That was the UK bond market broke in October, right? That was the guilt trip, as I call it.
Pensions broke, and then FTX broke.
Oh, and FTX, that's right. Yeah, November 6th. Good call. That, you know what? That was the day, too, because Monday, November 7th was the high in the 10-year Treasury. November 6th was the article in CoinDesk, and November 8th was when Changpeng Zhou drew all the attention to it, and FTX collapsed within a few days. That was the high. Each time something broke. We had the UK pension crisis. We had FTX, came back down here. Then we rose back up. We got to right about this 4.07 level, and then, hey, let's have a banking crisis. Banks started failing. Down we went. And now we came back up here. We bumped our head on this level in July. Now we're above it. We're back into something breaks territory. And we'll see where we go from there, guys. But yields, keep in mind, as these yields rise, guys, this is the interest expense of the U.S. government getting higher and higher, approaching $1 trillion for the year. And what do we got here from Captain Keebs? Happy Friday, my boo-boos. All right. I've been called much worse than a boo-boo. I'll take that. Thank you, Captain Keebs. I appreciate the super chat, sir.
Yeah, I read that as Bobos.
Bobos? I guess Bobo sounds better than a boo-boo, doesn't it? I don't know. Either way, I thank you, sir, for the super chat. my boo-boos, my bobos, whatever we are, a couple of bozos that we are. Thank you very much, Captain Keebs, fellow boo-boo. Things just took a turn for the worse real fast. Thanks for that, Captain. And
Well,
Kevin
those
DeBella.
are what the two bears called themselves.
Hey,
The one
boo-boo.
in the national forest, the Jellystone National Forest.
Yeah, Yogi and Boo Boo. Hey, Boo Boo.
Yeah.
Kevin DeBello, what's going on, brother? He says, I know it's bad, but I find myself feeling like the Joker ready to watch the world burn. I won't giggle. I won't laugh while it happens, but yeah, I do. Well, we'll talk about that in a second. Let me finish the comment. I am getting exhausted by the yo-yo of economy, politics, etc. Need an excuse to eat my dehydrated food. Well, I'm just saying if your dehydrated food goes bad in storage at the end of its shelf life, that's probably a good thing, right? Or the idea that's like saying, "Oh, I never got to use my auto insurance deductible." Drat. Right? You know, you have insurance. The idea behind insurance is have it and hope you never need it. And let's use the same approach, the same philosophy when it comes to food storage, right? Better to have it and not need it than to need it and not have it, right? So that's an insurance expense. I do the same thing. I got my beans and my rice, stored in the buckets with the O2 absorbers, long-term storage. That stuff's good for 20, 25 years if you play your cards right. So I'm not too worried about that one. As far as, look, Joker and watching the world burn, it has occurred to me, especially because, I'm short the NASDAQ, that, what's bad for most people is good for me right now. And you got to kind of temper that. You can't show enthusiasm. You can't. What's the phrase, Brad Pitt's line from The Big Short? Just don't effing dance, right? That's what it comes down to, right? We all know it's coming, and it's going to feel like vindication when it gets here. Just don't effing dance, guys. That's all I'm going to say. Just don't dance, right? You can feel vindicated. You can feel good about being prepared for it and taking steps to be in good shape from it. Just don't effing dance. That's all. Thank you very much, Kevin DeBella. I appreciate the super chat, sir, and the support of the channel. And my man Steve is back. What's going on, Steve? Bit of a stealth rally in uranium miners. What's your take on it? I get asked about uranium a lot. I just don't cover the space that much. I'm not so enthusiastic about uranium miners, and I'll tell you why. We finally got a new nuke just came online, right? The Vogel units in Georgia finally came online, those AP1000s, those big, beautiful reactors. I think they're 1,100 megawatts or something like that. Thank God they've come online, but let's not forget the cost of those AP1000s and what happened. They were supposed to cost $5 billion a piece, and I remember because I used to write for a nuclear blog way back in the day, a long time ago. It's long since defunct. But I was so excited about the AP1000, about all the projects, and one by one, I watched them get canceled all over the country. I watched the Shaw Group become Chicago Bridge and Iron. They went bankrupt. I watched Mitsubishi go bankrupt, right? The AP1000, those new reactors caused some of the biggest bankruptcies in the history of the world. I think they ran $13 billion over budget on that project. They were only supposed to cost $5 billion each. And the VC Summer plant, they ran more than $10 billion over budget, and that plant is not even going to get finished unless somebody buys it and decides to complete it. And the South Carolina, VC Summers in South Carolina, the ratepayers in South Carolina paid for that plant to be built. They paid tens of billions of dollars in the form of charges on their utility bills for a plant that will never push 1 megawatt. Not one electron will get pushed onto the grid from that unless somebody comes in on spec and decides to buy up a mostly completed plant and finish it, which I hope someday happens. But it's going to have to happen in a much better, more controlled manner than the initial construction. Nuclear cannot get out of its own way. I would love to see it. I'm so bullish on the technology and what it can do and the science and the promise of too cheap to meter. The problem is with too cheap to meter, like anything else, the government gets in the way. And the way we regulate nuclear power in this country is obscene. It's the bloated largesse and the red tape. There's 10 white hard hats for every one yellow one, and you cannot be profitable no matter how good your technology is when the government mandates that kind of crap. And I can say that now because I don't work in the industry anymore. But if I had said that when I work in the industry, I'd probably get myself canned. Unfortunately, that's why I can't get into the uranium space, because right now the industry, until they get out of the way of it their own way and figure out how to build a new plant on time and on budget, which is something they can't do right now, then the uranium industry is just going to be the existing plants will just slowly attrit away until one by one they shut down from failures and aging until there's none left. I don't even know how many operating reactors are left in the United States. When I got into nuclear in 2007, there was 104 operating reactors in the United States. Now I think it's something like mid 90s, low 90s. I know the plant I worked at where I wanted to spend the rest of my career, that plant got shut down because they killed bluefish. Oh, grandmothers, mothers, and more for energy safety, the Grammys. They invited Alec Baldwin and Christy Brinkley over to the local library to have protests about all the fishies we were killing in Barnegat Bay at that plant. All right, bluefish. Oh, if the plant shuts down, if there's a safety trip and the plant shuts down, fish, 100 fish might die, and the plant would pay like a $5,000 or $1,500 fine for every fish that died when that happened. You know what? Right across Barnegat Bay from where that plant was Viking Village, where I used to work on a scallop boat. And at Viking Village, those same bluefish, they sell for 35 cents a pound. But when the nuclear plant kills one, it's $1,500. That's our regulatory environment. You can't be profitable in that environment, no matter how good the tech is. All right, and that's my rant. And Steve, I kind of went a little sidetracked there, but that's why I just every time I try to get into the uranium space and the supply chain and everything, I just think about like what is the end demand for this material, and right now I just see it going down. Until we get these things, especially these SMRs, the small modular reactors, until we get those things up and running and we start building them by the hundreds, I just don't see growth in the market for it. It's hard for me to get behind that. Mish, you follow uranium a little closer. I mean, is there any more detail you want to add beyond my maybe I'm just a jilted former employee. I don't know.
Well, I mean, part of the problem with the nuclear power is they've never met a regulation they didn't like. So every time something happens, you add a regulation on and you never take it off. So that's where you end up with these 87 things you have to jump through to do one thing. Right. And I did look it up. It's 54 power plants with 92 reactors. Not
92. So we've lost 12 reactors over the course of my 15-year career in nuclear power. And when I joined, they were talking about the nuclear renaissance, about all these, they were going to build hundreds of plants in the U.S. We lost 12 instead. So it was hard to watch. Every one of those reactors that shut down broke my heart because I know what they were capable of doing and I know what they were capable of producing, and it's just we can't get out of our own way.
Yeah, there's a couple different countries out there that are loosening standards to try and get these reactors built, but
guys like
Chernobyl screwed everybody, to be honest.
Yep. And understand when you hear loosening standards in nuclear, right? That maybe that makes your skin crawl. Guys, they are the safest environments you could possibly imagine. The safety standards at a nuclear facility are so over the top and so tight. I mean, people used to ask me, like when I'd get into a debate about nuclear technology, they'd be like, well, what do you do with the waste, hotshot? And I'd said, sit next to it for 8 hours a day, every day, all day in perfect health. That's what I do with the waste because my office used to be about 200 feet from the dry cask storage where the spent nuclear fuel rods were stored. And I didn't get any measurable radiation dose from those. I walked within a few feet of those things every day on my way to work. They're perfectly fine. They're perfectly safe.
Who hasn't drank controlled pure water?
No, that I have not done. I haven't drank any water. I would if you put it in front of me. The medical isotopes that they gave me for my thyroid were a whole heck of a lot worse than anything that happened at the plant. Fun story, guys, about nuclear technology. I have had 2 thyroid ablations done. We're going to learn a lot about Jack here. I had an overactive thyroid glands. It's a condition known as Graves' disease. So they nuked my thyroid. They gave me pills of iodine-138, which is the same iodine material that's produced in fission reactors by the splitting of uranium, except I had to eat it. And it went right to my thyroid, and it cooked off my thyroid gland so that my thyroid would stop killing me. I did that twice, and each time I was too radioactive to get into the nuclear plant. If I just approached the gate, I would set off the radiation monitors and all the alarms, and everybody would freak out. And so I wasn't allowed into work. So I had to go on medical leave, not because I wasn't able to work, but because I was too radioactive to get into the plant. So I was too radioactive to get into the nuclear facility, but I was allowed to walk right out the front door of the hospital, emitting all of that radiation everywhere to the public. Every person who came anywhere near me didn't realize they were standing in a radioactive field. It wasn't harmful to them. But that goes to show you the double standards. Here, eat this. walk out the door and have fun irradiating the universe, but you can't get into the nuclear facility? That's how we regulate nuclear power in this country. Go ahead, Mish.
I was going to say, I got one for you. A flight from New York to LA will give you more radiation from the sun than I got in a month working on a nuclear reactor.
That's right. The average airline pilot or flight attendant gets more radiation dose in a year than the average nuclear worker. Now, there are some nuclear workers who do like the really hot work. You know, the guys who work on the refuel floors or under vessel, that they get more dose in that job. But the average nuclear worker gets less radiation dose in a year than the average flight attendant and the average airline pilot. And guys, gamma is gamma, beta is beta, whether it's coming from a reactor or whether it's coming from the sun. There is no difference. All right. We're getting a little off topic, but I'm sorry, Steve. I really ranted on that, didn't I? Thank you, sir, for the super chat and support of the channel. All right, guys, let's get on to the topic here.
Talking about nuclear power.
Oh, yeah. Well, you got a commercial nuke and a Navy nuke here, so you get us spun up on nukes. We're going to go. All right, let's talk about this one because, boy, did this narrative change. Hard landing is here for trade. Roiling world export champs. Hold on. Back the truck up, guys, because it's Friday. Where did this come from? Bloomberg, explain yourself. What's this hard? I've heard nothing but soft landing. I've heard nothing but no recession. And Jim Cramer declaring good times to be had by all. It's a party. Where did this hard landing come from all of a sudden? Huh. That's interesting. All right, but moving on. Economies with robust domestic demand are performing better, but exporters see trade flows influenced by geopolitical shifts. As economies gauge the likelihood of recessions in major economies around the world, a slew of recent data show that a downturn is already evident when it comes to global commerce. Gee, who has been talking about this for 6 months already? Rhymes with Sobuddy Neschel. China, the world's biggest exporter this week, reported the biggest contraction in overseas shipments since COVID-19 walloped the nation in February of 2020. What were you going to say, Mish? I'm sorry.
Rhymes with back.
Yeah, rhymes with back. We've been saying this all year while they've been talking about the soft landing and they've been talking about the pivot. We've been saying the whole time, guys, the data in the trade, the data in the freight, the export data, the prices, the inflation numbers coming down. It's not what they're telling us in the financial press. The numbers don't support it. The jobs numbers don't support it. And now, finally, they're talking about hard landing. Germany, the global number 3, saw its exports sink in the latest monthly data by the most on a year-on-year basis since early 2021. So it's not just China. Germany's seeing a slowdown. Exports from the U.S., which pips Germany for the number 2 slot, also contracted over the year in June. So there you go, guys. Exports in the 3 largest economies in the world. The 3 largest export economies, mind you. Japan is the 3rd largest economy, but they don't export as much. The 3 largest export economies in the world, all seeing declines year over year. Big declines year over year. Does that sound like a soft landing to you? No, Jack, it doesn't. But the American economy is enjoying a newfound sense of optimism thanks to an ingredient many of its rivals lack: robust domestic demand. Okay, there's your silver lining. America has robust domestic demand. Let's talk about that robust domestic demand, shall we? $1 trillion of credit card debt. There's your robust demand. That's not very robust. Oh, you're still not convinced? Okay, let's talk about the interest on that $1 trillion of credit card debt. Oh, look what that line has done. If you don't notice, guys, yeah, that done went vertical. The interest rate on that $1 trillion in credit card debt. There's your robust domestic demand. $1 trillion of credit card debt at 20.68% annual interest. That demand will not be robust much longer, especially not with 1 in 10 adults in the United States and their $400 a month student loan payment coming back in October. Hey, guys, that's only, about 6 weeks away, 7 weeks away? That's coming. What's going to happen to all that data? What's going to happen to this debt when another $400 a month in student loan payments comes back? What's going to happen to domestic demand for goods, for services when that $400 a month for 1 in 10 adults? What's that? About, I don't know, 20 million people are going to have to pay $400 a month? Because that went away during COVID.
There are 160 million working age adults.
160 million. So 1 in 10. So that'd be 1.6 million people paying $400 a month. Good God.
16 million.
Oh, 16 million. Yeah, wow. Maths are hard. Thanks, Mish. I can't move decimal places. Edward Diaz, 113, back in the chat. Thank you, sir. He says, anyone ever think about how the Simpsons always predict future events and somehow Homer still works at the nuclear power plant? Just saying. Yeah, I've been called Homer Simpson before. I was called Homer. The Simpsons predictions, I don't know. Simpsons has been on the air, since when did they first premiere? Like in the Tracy Ullman show in like 1985 or 1986 was the first Simpsons comic. So I guess when you've made enough content and enough hypothetical scenarios and jokes have been put out, and keep in mind, it's been on 5 days a week for 40 years. Sooner or later, you're going to be right about stuff. Maybe it's just the fact that the Simpsons have entertained so many possible combinations of future events that they've predicted all this stuff because they've predicted everything. But it is kind of eerie. Yep.
Are you saying monkeys with a typewriter?
It could be monkeys with a typewriter, or what was the South Park reference? The manatees with the balls that they would grab and create the jokes. That was Family Guy.
Yeah.
Or, the other thing we could do, guys, maybe it's the Stonecutters. You guys remember the Stonecutters episode? Who keeps the metric system down? We do. We do. That was their spoof on the Freemasons. Shout out to my man Greg Manarino over there. Maybe it's the Freemasons making all these Simpsons predictions come true. Or maybe the Freemasons are writing the Simpsons. And that's why it's coming true because, well, the Stonecutters rule the world. That's my tinfoil hat theory for now. But I don't really think the Freemasons, when I see what's going on in the world, what the little I know about Masonic beliefs and the tenets of the Freemasons, I see the decisions made in the world, and I see the Freemasons probably not in charge, not pulling the strings. Everything I see central banks doing and the Keynesian economists doing, that doesn't strike me as a very Masonic thing to do. The little bit I know about it, again, I'm outsider looking in here, but it just doesn't strike me as a very Freemason kind of thing. Thank you very much, Edward Diaz, and thank you very much, Vacation Time 247 says, thanks for the live stream and info. Hope everyone has a great weekend. I do too. But don't you go getting ahead of me just yet, Vacation Time. The weekend is not here. The live stream is not over. We still got to talk about all of this mayhem and the freight depression. But thank you very much, Vacation Time. I hope you too have a wonderful weekend, sir. Now let's get back into this story here, guys, because a freight glut is coming and shippers are in for a long haul. Gotta love all the shipping puns here. Stormy weather is ahead. Rough seas ahead for freight shippers. A perfect storm for shipping. All those wonderful maritime innuendos we could use. Remember the supply chain snarls? Cargo ships anchored for weeks outside the ports of Long Beach and Rotterdam? That all seems so 2021 now, not least to the shareholders of big shipping companies such as AP Moller Maersk. That's a mouthful. AP Moller Maersk and Hapag-Lloyd. Ocean-going container freight is an unsung hero of the globalization age. Before its invention in 1956, shipping could account for half or more of the price of international goods, says John McCown, a senior fellow at the U.S. Center for Maritime Security. Today, it's more like 2%. It's actually pretty cheap to move stuff across the pond. That is deflation right there, guys. That is the miracle of technology and innovation bringing costs down. If the central banks would just get out of the way and stop their darn money printing, innovation would make life cheaper. Case in point, in 1956, the price of a good, 50% of it was international shipping. Now it's only 2%. Shipping costs were also an underestimated factor in the post-pandemic inflation. Container rates jumped sevenfold in the 18 months prior to September of 2021, which notionally added 1.5 percentage points to the global inflation in 2022, according to the IMF. It's not a small number. Shippers' bottom lines and stock prices rode the boom. The industry made unfantasized about profits. That's a tough word, unfantasized. So I'm having Johnny Bravo articulation issues at the moment. The bust followed just as swiftly. Rates are back down to 2019 levels. Maersk shares have fallen 40% from a peak in January of 22, Worse is probably yet to come with durable goods spending flattening in the U.S. and Europe and merchants looking to unload inventories before placing fresh orders to Asia. China exports plunged more than 14% in July from a year ago. China exports, the world's factory, down 14%. So much for the reopening. So much for that second half rebound and restocking. The destocking cycle will go on into Q1 or Q2 of next year, says somebody I can't pronounce, the head of European transport research at Citi. That means more downside in freight rates. The industry gave way to irrational exuberance during the boomlet, that's a new word, the boomlet, the little boom of 2021, commissioning new ships on an unprecedented scale. Get this, guys. Vessels on order will add 30% to global freight capacity over the next 3 to 4 years. So as freight levels are collapsing, as the amount of stuff shipping is collapsing, as the cost to ship is falling, we're about to have 30% new capacity of moving stuff come online. And these aren't little ships. These are the big, massive container carriers, the one that can just barely squeeze through the Panama Canal. That's what's coming online. 30% surge in global container freight capacity in the next 3 to 4 years, just in time for global container freight demand to fall off a cliff. This is not going to end well for the shippers, and you can already see it. This is a couple days old, but I just want to reiterate because it bears repeating. Maersk sees no sign of a substantial rebound in container volumes. Nothing's moving, guys. If nothing is moving, what does that tell you about the bottom lines of the people who make the stuff and the bottom lines of the people who sell the stuff? If the shippers in between that move it are going out of business or are not making any money, then the people at both ends are not making money either. Soft landing. Soft landing. One of the world's largest container shipping companies expects container demand will continue falling this year as clients clear through massive product stockpiles, part of the prolonged inventory correction that's been going on since last year. Maersk officially has the volume expectations falling by 1% to 4% this year versus previous forecasts of a gain of 0.5% to a 2.5% decline. So they're saying instead of a half up to 2.5 down, they're saying 1 to 4 down. It's getting worse. It's not getting better. Maersk's second quarter earnings report noted no sign of a substantial rebound in second half volumes. This is the time of year, guys. They're supposed to be ordering stuff for Christmas season right now. Holiday shopping. This is when the orders to the factories get placed and the stuff starts shipping so it can be here in time for December. It's not happening this year. Wait for that in the second half of this year. Can you imagine those headlines when they start talking about how Christmas sales are so bad and Black Friday was such a dud? It's coming. It's already shown in the shipping numbers. We had expected customers to draw down inventories around the middle of the year, but so far we see no signs of that happening, said Maersk CEO Vincent Clerc during the media briefing. It may happen at the beginning of next year. The ocean carrier's report suggests the holiday season could disappoint if consumers are still worried about a recession and the $400 a month student loan payments that are coming back, mind you. Kristen Roloffs, I hope I said that right, the CEO and founder of container logistics platform Container Exchange, told the Sourcing Journal that he didn't expect shipments to pick up for the August to October peak shipping season. If there was an uptick, we would have seen it already. There's not a significant uptick in demand. There's not a significant uptick in prices. Nothing's moving, guys. Now, that's the slowdown in global freight. But that's not the only problem these shippers have. It gets much worse than that. UPS pay hikes for package handlers raise pressure on FedEx. Now, my first reaction to this is good. People deserve a raise. All right? Life got more expensive, and if the work you're doing is adding value and that value has gone up, you're entitled to a share of that value going up. That's free market capitalism. Go cry to the central bank if you have a problem with that. Of course, that's what central banks are going to do. They do have a problem with that. FedEx, the Teamsters deal will make it tough to reduce turnover. Maintaining labor levels has already been difficult for FedEx. The raises won by UPS package handlers are going to put FedEx Corp in a bind, while the salaries that unionized UPS drivers will make under the tentative 5-year agreement could have grabbed headlines. with a few years' experience could earn nearly $50 an hour. The bigger problem for FedEx might be that workers in sorting centers are getting even bigger pay hikes, with some increases hitting 55%. Remember, one of the big hangups in the UPS labor dispute was those part-time laborers who make up most of UPS's employees. Those guys were way, way underpaid versus the full-time guys. And we had that conversation. I can't remember who it was talking about that, but somebody brought this up on our Patreon Zoom call and said, yeah, it's the part-time guys that are really hurting. The full-time guys do really well, but the part-time guys take it on the chin. Well, they got raises as high as 55%. And good, because, guys, the Fed has stolen that from them over the last couple of years, all right? I mean, it's not like these guys are going to be living in the sweet life. They're just going to be able to afford the same lifestyle that they had a few years ago. That's all. These employees who are often part-time have already been difficult for FedEx to recruit. During the pandemic, the company had to run facilities at partial capacity, which drove up costs and hurt its on-time delivery performance. Meanwhile, better pay and benefits helped UPS maintain its labor force. Now, look at some of this stuff. This is comments from Mark Williams, the Senior Vice President of Western Operations for FedEx. This is something that was recorded. I don't think he realized he was being recorded when this happened. He said, we're going to have to sharpen our pencil a little bit and understand what's going on in specific markets, specifically for package handlers. The ground units can't raise wages. The ground units can't raise wages for package handlers too much, or it risks luring away delivery drivers that are employed by contractors, Williams said. Nearly 4,500 small businesses in the U.S. help FedEx deliver packages. So they know they've got to give a raise to their package handlers. They know they've got to do it, especially after UPS raised their wages. But they're saying we're going to have to raise them so much that our drivers are going to start wanting to be package handlers, which means they're probably going to have to raise the wages for the drivers too. If we get too aggressive, then it starts to compete with what you've got going on with your drivers, Williams told the contractors at the meeting. So we have to be cognizant of that. FedEx is saying right now, guys, with what UPS did, we know we've got to give people raises. If we give half the people raises, the other half is going to want them. So now we're getting into the dominoes. And again, good for these workers. They deserve it because they're still adding value. The costs have all gone up. The company's profit margins have gone up. These guys' standard of living has gone down at the same time. Absolutely, negotiate a higher wage. That's capitalism. But the problem is they're not going to let it happen because it's not just, well, let's just keep going on. We'll get to that in a minute.
It's not just FedEx, right? You also have Amazon is starting to do it too. So all of the warehouse workers are all going for a raise at the same time.
Yep.
The cost of doing business just went up.
Yeah, absolutely. Hey, you know what? They made X amount of dollars. And now life costs X plus 10. And now they're saying we want X plus 10. They're not getting a real wage increase. They're just getting a wage increase to keep pace with inflation of the last few years. All right. This is just an inflation adjustment that's long overdue. And keep in mind, the ownership class has already gotten their raise. Remember the two Fed governors who had to resign in disgrace for insider trading? They got their raise. Their assets went up in price. This is the other guy saying we want a piece.
Everybody forgets that in 2008, that was classified as a wageless recovery. Wages never went up or didn't go up for the first several years after 2008. So the worker got screwed in that one.
Yep. And the worker has gotten screwed since 1971. Yeah, we're too deep. We'll get to those. Thank you, Mish. 3 now. Oh, okay. 3 deep. Let's check this one out real quick, guys, because I saw this in Freight Waves today. And this made me want to just pound on the table. I can't do it because it'll mess up my microphone and my camera settings. But this is from Craig Fuller, the CEO of Freight Waves. Truck drivers, construction workers, and other manual workers are getting a huge pay raise. Get used to it. Manual workers are getting massive pay raises, and it's beautiful. UPS CEO announced that drivers will be making $170,000 a year in pay and benefits by the end of a 5-year employment contract. This is just the beginning for jobs in the physical economy. A few years ago, there was a great deal of discussion about the elimination of the physical worker, i.e. jobs in the physical goods economies. Think truck drivers, farmers, pilots, plumbers, oil rig, dock, warehouse, construction workers. These are all jobs that require physical and mental skills to do the job successfully. Many of these ideas regarding digitizing the economy were promoted by venture capitalists and tech media writers who've spent their entire careers working in the digital world and never the physical one. The reality is that digitizing content, insurance, payments, or finance is relatively easy, while digitizing the real world is incredibly difficult. If you aren't convinced, go research the autonomous trucking startups that raised billions in capital from 2015 to 2020. FreightWaves covered many of these companies and their progress, or lack thereof. Most of those businesses are now defunct, even when funded by large companies like Google and Uber, the most successful venture capitalists, and some of the smartest minds in the digital economy. The reality is, and oh man, I love this quote. I love this line. Fine bit of writing. What was the guy's name again? Fine bit of writing, Mr. Craig Fuller, CEO of FreightWaves. The reality is that the physical world is incredibly hard to digitize and therefore automate. The real world is messy. Quantum physics and chaos theory reign. Things can happen, things that can't be anticipated in a lab or a computer program. A few years ago, the arrogance of guys like Michael Bloomberg on TV saying, all these people, they need to go learn how to code. We don't need farmers. We don't need truck drivers. Anybody can do it. Yeah, anybody can be a farmer. Tell that to everything I put in the dirt outside that freaking dies, no matter how much water I give it. If you pull it and it grows back, it's a weed. If you water it and it dies, it's a plant. But yeah, that's an easy job that can be replaced by automation. Yeah, right. Automation is a productivity enhancement tool. It is not a replacement for a human being at the helm. Fantastic piece of writing by FreightWaves. But guys, they're talking about massive pay raises here. You got to keep in mind. You got to keep in mind this guy. Where is he? I got to bring him up here. I have him somewhere to go. Where's J Pal? There he is. This guy. He is between you and those raises. WTF happened in 1971. I talk about it all the time. Jerome Powell is intent on stopping these raises from happening. And guys, this is the third front, the third adversary that is attacking the people who move stuff in the economy right now. It's Jerome Powell and those like him, the central bankers. The freight guys, freight is in decline because global trade is slowing, because people can't afford to buy stuff after the inflation. And now you've got laborers demanding higher wages, and justifiably so, because their standard of living has gone up and because they can't afford to buy the stuff. See also the first one. And then you've got the central banker who's saying, don't you dare give those guys a raise. I'm going to put you out of work if you do. I'm going to raise interest rates so you can't afford to borrow money to keep your business afloat. Your interest expense, if you try to buy a new truck and finance it, will be unaffordable. The interest rates on your warehouses will be unaffordable when you refi your commercial real estate loan. Jerome Powell is saying, I am going to stop those raises from happening. And I guarantee you, J Powell is seeing these stories about the UPS guys and the FedEx guys and 40, 50% wage increases. And he's saying, oh, heck no. Not if I have anything to say about it. And that's the third adversary that is squeezing these freight drivers right now, central bankers. And what are these freight carriers going to do? You've got a global recession, probably a depression, soft landing, yeah, right. You've got 40% increases in your labor costs, and you've got central banks trying to put you out of business to make sure you don't give them those raises. What is a freight carrier supposed to do in this environment? Oh, and by the way, there's 30% more ships are going to be online within 3 to 4 years. Ships that there's just nothing to put on them. What a mess in logistics. What a freaking mess. And that's why I'm calling it the freight depression. And guys, if it's the people who move stuff, the people who bring you everything goes on a truck or a train or a boat. If they're hurting, that means everybody upstream and downstream in the supply chain is going to be hurting too, because it all goes on a truck. Let me get Jerome Powell off the screen here. And look, this is not just a U.S. problem. All right. Let's talk about a couple other things here. Well, first of all, now we'll go right to this. We'll go right to China. Country Garden's losses fan fears on China property market. Because it's not just here in the States, it's not just on the pond. You've got a collapse in consumers going on in China right now. Keep in mind the phrase known as the wealth effect, all right? And a famous economist named of Robert Shiller I talked about this with Travis over at Real Estate Mindset. Great channel, by the way. Check out Travis's channel, Real Estate Mindset. Robert Schiller talked about the wealth effect. And there really isn't a wealth effect in stocks. When stocks go up in value, people don't necessarily feel wealthier and then go out and spend more money. But when homes go up in value, the average consumer feels more wealthy and goes out and spends more money, which means higher home prices has a way of stimulating the economy just by making people feel better. It's not real, but it makes people feel better, and therefore they spend more and the economy grows and it becomes a self-fulfilling prophecy. Well, the opposite is true. When homes go down in value, people feel poorer and they stop spending. And nowhere in the world have homes fallen in value harder and faster than in China right now. And that's a country with what, 1.3, 1.4 billion people, all about to slow down their consumerism. Concern is mounting that the prominent developer will default. Firm says it will likely report a loss of $7.6 billion. This is one of the largest developers in China. They're losing billions. And guys, buried within this article, the reason why I have this one up here is it's buried way down here. We're going to scroll past all the meat and potatoes of this article. This is what I wanted to show you about this one. Representatives of CICC, that is the, well, hold on, I have it. The China International Credit Group, or Credit Corporation, CICC, told some Country Garden note holders that its bond underwriting team has been engaged to explore options for the builder's yuan note maturities, according to people who were involved in the private conversation. Country Garden has a 3.9 billion yuan bond due September 2nd. This is huge. No headlines about this today. All right? This is like paragraph 15 of this article. CICC, the China International Credit Corporation, they're debt restructurers. You bring these guys in when you're done, when you're about to default. And these are the guys, these are the heavy hitters, right? This is the ringer you bring to sit at the negotiating table who says, look, you'll get nothing unless I say so. So you're going to accept pennies on the dollar from me or you get nothing. That's CICC. And Country Garden just hired them. That means Country Garden is toast. All right? And I can't believe this is so far down the article that they mentioned CICC being hired here. This is huge news. Country Garden is 4 times the size of Evergrande. This is so big. And also note, they were not brought in. CICC was not brought in to negotiate a restructuring on the dollar-denominated bonds that they missed the payment on this week, right? All the stories this week was that Country Garden missed on 2 dollar-denominated bonds. No, that's not who CICC was brought in to restructure with. CICC was brought in to restructure on the yuan note maturities, the domestic, the China currency bonds, which means they have no intention of paying back any of the dollars they owe. You'll get nothing. They're talking to the Chinese people that are owed money by Country Garden, and they're saying, we're here to figure out how many pennies on the dollar or how many pennies on the yuan, whatever a penny is in a yuan. I don't know what they call it, but they're here to negotiate the yuan notes. Country Garden is going downhill so fast. This is happening faster than Evergrande. And, you know, back when Evergrande was blowing up, I said keep an eye on Country Garden because they're huge. And Country Garden's bonds were still trading at like 100%, you know, trading above par value. They were fine. Country Garden was fine. It was all the second-rate developers and the reckless ones that were in trouble. Country Garden was like your A-lister. He was okay. Not anymore. If Country Garden goes down, there's I guarantee you there will be a half a dozen other ones that go down right afterward. And they've already hired a firm to come in and restructure their yuan-denominated bonds. That means this thing gets a whole heck of a lot worse before it gets any better. Oh, and let's not forget about China's local government finance vehicles, or LGFVs, the secret shell companies that China sets up in order to break the law. Chinese local governments, their provincial governments, their municipal governments, they have limits on how much money they're allowed to borrow. So what they do in order to meet their GDP targets, because every year they have to show so much growth, otherwise they'll get replaced. So they set up fake companies, and those companies take out all the debt with the implicit guarantee of the municipal government, but it's off the balance sheets of the municipal government, so it doesn't count. And then they use that debt to fund they call them white elephants, infrastructure projects that make headlines, but they're not really useful, like bullet trains between cities that there's really no need to connect them. It's not that many people commute between them. All these magnificent stories, and the people in California, we need high-speed maglev trains like they have in China because climate. Nobody rides those trains in China. These trains all lose money, right? There's no cash flow from these trains to pay back the bonds because the market didn't want the trains to begin with. There's not enough commuters to use them to justify the expense of building them. And that's why China, even California can't get this train built. How many times in the last 50 years have we heard about high-speed rail connecting Los Angeles with San Francisco? It's not going to happen.
Or Vegas with LA.
What's that?
Or Vegas with LA. I think Elon's trying to do that one.
Vegas to LA? That's a lot. That's a lot of desert. We have planes, just little planes. Just you're there. I mean, what's a flight from Vegas to LA? Is it even an hour? If you count taxi time, maybe. China will let local governments raise about 1 trillion yuan or $140 billion through bond sales to repay the debt of local government financing vehicles and other off-balance sheet issuers, Bloomberg reported. Debt-laden municipalities represent a major risk to China's economy and financial stability. Economists say after years of overinvestment in infrastructure, plummeting returns from land sales, and soaring COVID costs. Now, here's the big deal about this, guys. What's not being said. This makes it sound like, okay, China is going to let the municipalities take on this extra debt, and it's a bailout of the LGFVs, right? Wrong. That's not what this is, because it's only $140 billion. All right? Scroll all the way down here. Where was it? Let me find it. You gotta do a control F trillion. Here we go. The International Monetary Fund estimates $9.1 trillion in total debt is held by local government finance vehicles, which cities use to raise money for infrastructure projects critical to the country's development. And I talked about this in my presentation at the Silver Symposium last year on the China housing bubble collapse. Shout out to all you folks I met at the Silver Symposium. And shout out to all you folks I'm going to meet at the Silver Symposium in Vegas. We'll talk about that more in a minute. $9.1 trillion of LGFV debt in China. And this article is saying that the government is going to let $140 billion onto the balance sheets of the local governments. All right, that tells me that China intends to default on potentially trillions of dollars of this LGFV debt. And guys, most of this debt is residing in China. My God, I hope it is. God forbid your pensions are in this stuff. I don't think American pension funds are invested in this stuff. I bet you Tether is. I bet you a lot of these stablecoin issuers did. Oh, yeah. Oh, yeah. Watch that happen. That's going to make a mess. But $9.1 trillion is out there, and they're saying we'll let $0.14 trillion onto the balance sheets of the local governments, which another way of saying that is we're still going to make sure $9 trillion of it stays off the balance sheets. And whatever happens, happens. They're setting up for defaults, guys, between CICC coming in to negotiate with China's bondholders, which the yuan bondholders, not even the dollar bondholders, they're screwed. 9.1 trillion in LGFV debt. Bad things are happening in China. This is happening very fast, guys. Now, look, I don't want to be all negative. And I told Mish, make sure we get our positive story in. All right, because it's all doom and gloom. I get it, Jack, to Perma Bear. All right, I'm squinting. I'm looking for that silver lining, and here it is. Your silver lining. Before we talk about Silver Symposium, let's talk about the silver lining. U.S. mortgage delinquency rates fall to all-time low. What? What about housing crash? I thought the housing market was gonna. Well, maybe not. Now, what this tells me, guys, is kind of what I've been thinking for a while now. Yes, I think the housing market is still going to crash. No, I don't think the crash will be caused by the housing market, even though homes are unaffordable right now. I think the crash in housing is going to be caused by a wave of unemployment that's caused by something else. Maybe that's commercial real estate. Maybe that's bank failures. Maybe that's the return of student loans causing mass credit card delinquencies. Whatever triggers the event, I don't think it will be housing that triggers it. But when the event does get triggered, housing will go down with everything else. And this article supports that housing will not be the cause of the next crash. U.S. mortgage rates, delinquency rates fall to all-time low. U.S. mortgage delinquency rates fell to a record low in the second quarter due to a strong job market that is not strong and low interest rates prevailing on most home loans despite the big jump in mortgage rates over the last 2 years, a report on Thursday said. Delinquency rates fell to 3.37% at the end of the second quarter, according to the Mortgage Bankers Association National Delinquency Survey, their lowest since the MBA began collecting data in 1979. Guys, this is lower than delinquencies have been since 79, down from 3.64% year over year. There's no mortgage delinquencies, guys. Now, the housing market is still frozen. Don't get me wrong. Frozen solid. But everybody is sitting on those mortgages that they refied in 2021, 2022. I think it's something like 80% of mortgages in the United States are below 5% interest rates. So let me know in the comments. What do you guys think? If you refied in 2022, do you have any plan of moving? Let me know down in the comments. Let me know in the live chat. If you refied in your mortgage, are you even going to look at another house? Are you even entertaining the notion of selling your house? And if you are, I bet you're planning on renting. If you're selling your house, you're probably going to cash out, and then you're going to go sit in a rental and wait for the market to crash. I considered that, but I love my house too much. I won't move. But guys, housing is not going to cause this crash. Mortgage delinquencies, all-time lows. I remember seeing that and saying, what? How's that possible? Everybody's got good mortgages, low rates, those near zero rates. Everybody locked them in, and now everybody's just sitting there like, nope, I'm not moving. Now look, you have a baseline movement that happens in the economy at all times. You have people get divorced. You have people have to move for work. You have military families that get moved around. So you're always, even with most people saying, no, I don't want to move, you're always going to have a small number of people that just have to move for whatever reason, be it hardship or just life events. So that's going to slowly erode all of these 2.2% mortgages that are out there. But housing is not going to be what crashes this market, guys. It just ain't happening. That's my good news for today. Mortgage delinquencies at all-time lows. Now let's talk about the Silver Symposium in Las Vegas. September 29th to October 1st, beautiful Caesars Palace. I will be there. Mish will be there. Gigi will be there. Ninja's going to be there. Chris Taylor's going to be there. Look at the names. Look at all the guys that are going to be here. Dan from I Allegedly. Where's this list here? There's the Ninja. There's Dan. Joe Brown from Heresy Financial. How could I forget Joe? Every time Joe talks, I love Joe's speeches. He does such a fantastic job. Rob Keynes from Gold Silver Pros is going to be there. Patrick Hakeem. I met Patrick at the Silver Symposium in Spokane last year. What a stand-up. What a nice guy Patrick is. Smart kid. Wildly successful. Bitcoin miner. Did a fantastic job. Now he's teamed up with Rob from Stock Pulse working on the event. I love to see Patrick doing well over at Stock Pulse, Sat Pulse, Economic Preppers. He's everywhere. Keep your eye on Patrick. We'll be hearing more from him. Chris Taylor, my buddy Chris from Financial Prepper. I think Stacy's going to be there. I don't know if Stacy's going to be there with Chris. I hope Stacy's going to be there. We see her too. Looking forward to seeing you, Chris. Always a good time to hang out with you. What was that, Mish?
Stacy's going to be there for at least one day, and you have 5 supers.
5 supers deep? Well, I better hurry up. So long story short, guys, won't you please use that link that is down below in the description. Save yourself 10% with that affiliate link on your tickets for the Silver Symposium. It is a great time. And when you see me at the Silver Symposium, guys, do not be shy. I want you to walk right up and say hi because I love meeting you guys at these events. I love hearing about your jobs, the industries that you're in, and what is happening in them. It influences the channel. It gives me better information, good places to look. It's fertile soil for future content. So come on out to Caesars Palace in Las Vegas. What was that date again? September 29th to October 1st. Use that link down below. All right, let's get to some of these. We are a few deep. We talked to Kevin. We talked to Vacation Time. All right, Crypto Canvas. What is your opinion on blockchain? That's awful generic there. Let me just say I like Bitcoin. Bitcoin is the only crypto I am currently buying. All right, I buy a little bit of Bitcoin all the time. I use an app called Swan. Link down below to Swan. It's an affiliate link should you want to check that out. I don't follow Bitcoin's price regularly. I just make regular small dollar cost average buys, and that's set to autopilot. And I do not leave my crypto on Swan or any exchange. And to Swan's credit, the one reason why Swan is the one outfit that I'm comfortable using an affiliate link with in crypto, and guys, I get offers for affiliate links in crypto all the time. I get offers for ICO projects, and we're partnering with influencers to pump this altcoin. I delete them all. I don't touch any of those. Trust me, they're there. I leave a lot of money on the table when it comes to crypto. There is a big market for influencers to pump altcoins out there, and I don't touch it because I think there's just too much sleaze. But Bitcoin I like. And Swan is the one outfit that Swan even says, don't leave your coins on my exchange. I want you to self-custody that stuff. So that's why I'm comfortable recommending Swan, because I believe their advice is sound and I use the product myself. So I like Bitcoin. Now I own a little bit of Ethereum that I mined, but I'm not buying Ethereum. I still have a little bit of Ethereum. It's the Ethereum I mined. It's kind of just sitting in my wallet. Maybe that'll do well, maybe not. But I'm not as excited about Ethereum, especially not since the transition to proof of stake. I'm not a big believer in proof of stake. I prefer proof of work. I believe the energy consumption is a feature, not a bug, of Bitcoin and of proof of work blockchain. So I am a big fan of the BTC. That's my opinion on blockchain. There are many imitations. I stick to the original Bitcoin. Thank you very much, Crypto Canvas, for the super chat, the support of the channel. And thank you, the big one, too. I sent you a message on X regarding Oyster Creek. X, you mean Twitter? The tweet X? Okay, I'll call it X. Okay, Elon, I don't know what your plan is. Is your plan to bring it back and call it Twitter Classic? Is that what your plan is? We'll play. We'll say X. I will check that message on X regarding Oyster Creek. Oyster Creek is the name of the nuclear generating station where I formerly was employed, gainfully so. Good times over at Oyster Creek. Sadly, they are behind me because the plant was closed because we killed too many bluefish, which sells for 35 cents a pound at the fish market across the bay. Okie dokie, and that's something I couldn't say when I worked for Oyster Creek. That would have got me in trouble if I talked like that. The freedom of being your own boss, which is a prison unto itself, but it's a good prison of my own making. Kevin DeBell is back. What's going on, Kevin? I got a whopping 2.85% raise. Thanks, boss. Wow, that's almost half the yield on a 1-month U.S. Treasury. Congratulations, Kevin DeBella. They can't even call that a cost of living adjustment, can they? That's an F-COLA. That's a fractional cost of living adjustment. A FCOLA. As in Facolia. Did I just get myself in trouble when I said that? I'm sorry to laugh and make a joke about your raise, Kevin. If you can't laugh about it, what can you do? You can only... If you can't laugh about it, then I'll just be in the corner curled up in a fetal position crying and sucking my thumb about how the cost of living has gone up so much. So you got to joke about it. I remember Hurricane Charlie chasing us home. It was one of the worst experiences I ever had when I was working on a fishing boat. Was we went out. Now we weren't in the middle of Hurricane Charlie, but we rode that sumbitch home like a surfboard. That thing chased us all the way in, and we were all out on deck because nobody wanted to be in the galley or in the bunk room if the boat rolled over. Everybody wanted to be out on deck if that happened, and we're all out on deck just getting soaked, going up and down these waves, and every time some big wave crashed over the deck, we were all just laughing. It was like this sick, like somebody mentioned Joker laugh in a live chat earlier, or one of the super chats. It was like, oh my God, we're all gonna die. This is hilarious. It's almost a defense mechanism, because if you can't laugh about it, you're left with the unfortunate reality of it. So you gotta laugh about it, Kevin. Thanks for the 2.85% boss raise. Thanks, boss. Awesome job. And again, you get double that in the U.S. Treasury. But thanks, Kevin. Appreciate the super chat support of the channel. Thank you, Dan Hadeen, who says, wait till the auto contract 40%. Is that really happening, Dan? I heard the UAW wants it. Are they actually going to do it? I hope they get it. By the way, UAW guys, I hope you get it. Because your cost of living has done that. And this isn't a 40% instant raise, guys. A lot of these are like 5-year deals. So the 40% raise is spread out over the next few years. Think about what inflation's probably going to do over the next 5 years when the credit event finally happens and the Fed does what we all know they're going to do, is cut rates and burr, and what inflation does after that. You better lock in that 40% raise while you can. So good luck, Dan. Good luck to the UAW guys. I hope it works out for you. And I hope you get it before J-Pow turns the screws to your employer, because he's trying. He is trying to crash the economy before those 40% raises happen. Thanks a lot, Dan, and thank you for supporting the channel on Patreon as well, Dan. There is a link down below to the Patreon group. Should you feel so inclined, we get together once a week for a Zoom call Q&A on Patreon. And Captain Keebs is back. He said, hey, Bobo. Hey, Bobo. Let's get a picnic basket. Hey, hey. Okay, look. I guess I got to say that in my Yogi Bear voice. Hey, Bobo, let's get a picnic basket. Hey, hey. I don't know. Was that Ed Norton or was that Yogi Bear? I don't know.
It could have gone either way.
It could have gone either way. Was Art Carney the voice of Yogi Bear? Art Carney was the actor who played Ed Norton on The Honeymooners. I'm thinking of my dad now. But I don't know. He sounded a lot like him. I'm pretty sure he was based on him. Thank you very much, Captain Keebs. I appreciate that. All right, guys, we have been running for an hour and 10 minutes straight. Let's see what the markets ended up doing before we roll. S&P closed at 44.64, down a paltry 4.7 points. Not bad considering where we opened up today. The Dow had a good day, up 105 points, 0.3%. 35,281 to close for the Dow. NASDAQ closed off the lows, but well off the highs as well, down 76 points or 0.56%. At 13,644. Now, here's the thing, that 50-day moving average, guys. Watch that next week, all right? Watch that 50-day moving average. We're going to do a little doodle here, all right? Are we going to come up and bounce off of it and head lower next week? Or are we going to break out back above it, retest, bounce off of it, and head back higher? Let me know in the comments, where does the NASDAQ go from here? Are we going to be talking about the soft landing next week, or are we going to be talking about the freight depression next week? I don't know. I know what Jim Cramer is going to be talking about, but I don't know what they will be talking about. Also, the S&P pushing its S&P is pushing its 50-day moving average. Did manage to eke out a close above it. All right, so that level there, that held today. So I'd say that's an important hold. The S&P's got to stay above that. If we get the S&P break below 4440 on a close, that is a bad sign for the other indexes. Keep an eye on that level, guys. And make sure I got everybody. I think I did. I didn't miss anyone. I did not. So let's bring up the man, Mish. Guys, I just want to say thank you very much for everything. Thank you for all the super chats and the generosity today, for spending the time with us. Thank you to all the new members who joined the group, over the new subscribers who came over from Travis's channel at Real Estate Mindset, and everybody else who discovered the channel recently. Welcome, guys. I appreciate your time very much. Don't be shy in the comments. Let me know what you guys want to hear about, what your questions are, because that informs the content that comes out. This is a two-way street. So I want to know what you guys are thinking so that I can better make my content to match what is on your mind. Mish, you got anything you want to add, brother?
The voice that everyone associates with Yogi the Bear was Dan Aykroyd.
Dan Aykroyd, really? That's interesting. He kind of looks like Dan Aykroyd. I got to go watch Ghostbusters now. Huh. The flowers are still standing. Dogs and cats living together. Mass hysteria. Love
Worst
that
movie
line.
ever made. Chevy Chase and Dan Aykroyd. Nothing but trouble. The only movie I've ever walked out of the theater for.
I don't know if I've ever seen Nothing But Trouble.
First week it was out.
Wow. Chevy Chase and Dan Aykroyd, and it didn't go over well, huh? Huh. Well, it was the 80s. It was, they had that magical white energy powder back then. Messed up a lot of movie sets. All right, we're not going to get into that one. I'll end up in YouTube jail. All right, guys, I just want to say thank you very much to everybody for everything you do for the channel. Thank you for your time. Thank you for my Patreon supporters for everything you guys do. Thanks for all those super chats and your support of the channel. It really does help. Thank you for the thumbs up, the like and subscribe for the YouTube algorithm. Thanks to Mish and all my blue wrenches for keeping things neat and tidy in the chat. And also, I got to say, hi, Mom. Hi, Dad. I love you guys. Everybody have an awesome weekend. Hard times are coming, but they're not here yet. So make the most of this time, because there will come a day where you wish you had today's set of problems. And until then, live small and dream big.